The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. No, it's not a new guest host. It is your host of the hour, 11 o'clock till noon, Tiger Technicians Hour, Basil Chapman. I got the bug over the weekend. I thought I'd been playing tennis a little too much, and maybe that was a problem, but it wasn't. Turned out to be, I think it was the flu, and I'm getting over it real quickly. But the voice, whenever I have a cold or something like that, drops about a fifth, maybe almost an octave. I will talk a little slower. And meanwhile, back at the ranch, some exciting things have happened. Today, the Dow went above the 13,661 level to start a monthly leg G/C. That is really exciting. Month hasn't finished, but most importantly, what we see is that with a new high, a new recovery high that is, and the technicals, the stochastic at 83%, of course we've still got a couple of weeks to go before the end of the month, and the MACD flat but positive, maintaining the last signal, you've got to consider that this is probably a leg C, and I'll explain why in a moment. But the S&P, the SPX, did that on Friday. And I'm calling that a leg C because the technicals and the S&P are even stronger. The MACD, if you look at this, the green line, that fast-moving average, above the red line, the slow-moving average, that's still very positive. So all I can say is that we are in that pink zone. I haven't got my mobile device up, so I can't see it. But this should be pink at the bottom and light green pink at the top and light green at the bottom. And that's the zone that I've been talking about for some time, that if the Dow can get in there, that's where we're going to see the greatest chance for both higher prices and then tremendous resistance. The Dow now is at 1474, goes right out, click, gone. So I just wanted to update there. The longer-term trend says that if this is leg C, and we got to compartmentalize. It's really important. That's why the ChapmanWave methodology to me is just the beauty of it. Let me show you this. Well, you'll use the S&P. I've got it up. The S&P shows that 1576.09 was the October 2008 high. The low was 666.79 on March of 2009. The decline occurred in about 18 months. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. Less than 2 years. The incline has taken from 2009 March, we're almost there, so it is 4 years, almost 4 years. Steady, concerted move to the upside. When we say markets can correct very quickly, absolutely they can. They can also take a very similar left side, right side price time match when you go from the low of April of 1997 at 733 to the high of 1557. Look at that. You can do it right there. I've got it in other charts. I don't want to do it here. It'll just get a little messy. But you can take your left side, right side price time match, and it went to 768 in October of 2002. Went up in an orderly fashion, came down in an orderly fashion. It doesn't feel that way when it comes down because we kind of bias towards thinking positively, at least most people are. Excuse me while I lubricate that throat. So let's just go to this. On the upside, there's a chance that if this is leg C, let's imagine that February is a lousy month. No new high in February. That means that March is the first time we can get leg D, and that April will be the first time you can confirm a peak D by having a lower high bar. So it's very positive looking out. That's the S&P. But wait a minute. When we're looking at the weekly chart, see the monthly chart is just steadily higher. The weekly chart has had a bumpy move, and it's made these cup or V-shaped patterns at the bottom, and it pulls back sharply, very sharply, and then it goes up to new modest highs. What I'm looking at here is that there's a trend line, and that trend line depends when. It's a weekly chart. That trend line comes in at about 1520, between 1518 and 1522, underneath the previous all-time high. Still, the 9-period moving average is at 1451. The stochastic's at 92%. Now, if this is where we're going to find out, because I've got the chance of a shorter-term sell signal coming in the next couple of days, this week probably. And if that occurs, I'm only anticipating 200 to 300 points down in the Dow, and then the market should start to climb higher. This is what I call the ChapmanWave stalk leg, not necessarily the formation. There is a formation coming in. I don't want to draw it just yet because it's still premature. I have to wait for the month to finish. But at the same time, what I am looking at is the psychology of buying all the dips. And as many people get bearish and bearish and bearish, so the market says, no, not yet, not yet, not yet. And every time you have just an intraday, even today we're supposed to be in a pullback. And we've got it intraday, and yet it keeps trying to look, the Dow keeps trying to pop up. We've got DuPont acting well. We've got a bunch of Dow stocks acting well. Boeing is acting kind of reasonably right now. But, you know, my suspicion is that once these things start, it's like an SEC investigation. Once they start these investigations, it takes a while before. I mean, you've got the Dreamline, an incredible machine, done all on a computer. There were no mock-ups, hardly any mock-ups. It was unbelievable. So now they've got some real bugs. So what happens is the Dreamliner becomes a nightmare liner, at least for the short term. They'll resolve these things. They've got thousands and thousands of people working on it as we speak. But then the investigation takes its toll. And then what happens if Japan Airlines and other airlines start to sue Boeing? You know, it can have a lot of repercussions. It's a shame. It really is a shame. But safety is a factor? Absolutely. So let's hope that they resolve it one way or the other very soon. Okay, so look at this. So the weekly is still an uptrend. It's getting real close, within 40 points of 400 Dow points, 500 Dow points of very strong resistance. But so far, if that stochastic at 92% can flatten out and trade between 90 and 96% over the next 6 weeks, this market then will challenge that 1520 level on the S&P. On the short term, we've got a leg C, which has made a peak C today. Now I've got diverging. No. Oh, lovely. It went to a leg C today, continuation. The Dow, so the daily chart is at 96%, getting a little overbought, but still walking the 9-period moving average support at 1474. Now look at this. INDU. The Dow itself is making a potential doji, leg C. MACD strong, stochastic strong, on balance volume says, hey, just be a little careful here. So I'm anticipating that we will get a leg D up and maybe D or E somewhere around there. I'm looking for some kind of a reversal to take place. And as I say, the Dow then would come back and retest the 13,500, 13,400 area. 13,477 would be a good place to hold. A 3 to 5 day correction could even go a little lower. Now, this is very important. Look at this. NYA. This is the New York Stock Exchange. New York Stock Exchange, a leg D. It's a little more advanced in its move. So a lot of this is telling me, just on a shorter term basis, weeklies and leg B/E, monthly chart. Look at this for the New York Stock Exchange. I must tell you, I looked at some charts I did a lot of chart work over the weekend until I lay in prostate for about 24 hours. The New York Stock Exchange, 8718 was the level to break, and now it's gone to 8793. So this is, I call this new leg C. I'm not calling it an E, I'm calling it a new leg C. MACD's at 89%. So the New York Stock Exchange is lagging terribly below the 10,387 high that it made in October of 2007. And now look at this. Look at all those trend lines that it has to get above. But in the meantime, it's acting pretty well. So and now if you look at the IWM has actually been leading. The IWM is at all-time high. Well, I can't say all-time highs. I don't go back to 2000. But certainly in the chart, the price chart that I have, it is an all-time high. And that's at 87.28. Is that right? 88.76. So this is new leg C up. I like what I'm seeing. Okay, let's just make it as simple as possible. Now let's go to some other things. In fact, we'll run the numbers. So the Dow is at 13,648. Look, it was down earlier. It was up. It was down. It started off up. This is what I mean by that psychology of the stalk leg formation. It just constantly there is buying that comes in to support and take the market back to at least an unchanged or just a minor pullback on the days that it's weak. So the days young, I wouldn't be surprised if we pull back by the end of the day a little bit. But this is fantastic. This is really it is quite amazing. Leg D in the in the daily chart. Leg B, I'm calling this leg B in the weekly chart with a stochastic at 95%. Boy, I'm not going to complain about that. Let's look at different things. So let's look at the EUR USD. Just in a consolidation, 1.329, that's the dollar-euro currency pair. Nice high-level consolidation. Stochastics is 76%. That's not great. MACD's, okay. But the real thing is that it hit the 200-period exponential moving average. Look there, right there. It hit it, and it couldn't break above it and hold. So this is going to be very important. The moment that it starts to trade at 1.344, somewhere around there, to 1.35, that's going to say, great. Now it's turning the 200-period exponential moving average in the weekly chart into some kind of a support. But at the moment, it's a magnet, doesn't allow it to go much higher, doesn't allow it to go much lower. 1.31 is very strong support. And then you've got the USD, JPY. Now, I don't know whether this is a G. It looks to me like everything about it says this is probably a G top. I'm going to put G/C because I still haven't got a confirmation. But the USD, the dollar, the Japanese yen currency pair, this is leg D and probably a peak D in the weekly. To me, that's more important than the daily because it says, I've climbed above the 200-period moving average. Look at this. I'm going to squeeze the chart. 1, 2, 3, 4, 5. From the moment it broke down, this is the USD, the currency pair, US dollar, Japanese yen. The moment it broke down back in October of 2007, this is the first time that it's even climbed above the 200-period exponential moving average. That makes it very important. It makes it important for two reasons. It says there's a ChapmanWave cup and ladle breakout, which always goes to, or no, it doesn't always, almost always goes to at least a D, and then it pulls back. If it's a very strong move, the pullback should not take it back to the lip, the breakout, 84.17. It's at 88.55 right now. So the major support is at 86.48. And that's what I think is going to pull back a little bit more, and then we'll see if it has internal strength. I'll be back. Basil Chapman. Yes, it's Basil Chapman. Doesn't sound like it, but it is.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direxion Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direxion Shares gives you the tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and will be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Basil Chapman, we are back, and let's just run the numbers. So the Dow is up 4 at 13,654. The S&P is at 1484. It's down $1.50. I'm going to go to the Qs if you don't mind. The Qs are down 23 cents to 66.84. I have it probably at a peak E right now. I think they have a tough time making it above 67.48, just at least for the shorter term. We'll see. Now, the weekly chart has made a very quick leg A to B to C, and then a doji high of D. If this week 67.48 is not taken out, then there's a chance that in the ChapmanWave methodology, the quicker you get to a D, the quicker you're in for a pullback. It's just a pullback. It's not it can turn out to be a major sell signal, but normally it's just a pullback. So I would anticipate that it's going to dip and it's going to go below the 66.11 area, which is the 9-period moving average in the weekly chart. Probably it's going to dip maybe a little lower, 65.70s, and then it'll try to rebound. That's my thinking. The monthly chart. I've got a G/B. It needs 70.59. Let me double check. It needs 70.59 to actually break out to the upside, as will also break the resistance channel, what I call the inside track. You know, my CD introduced in the ChapmanWave, I discuss it in great deal. The inside track where prices very often get repelled, and then it's usually a channel line, but it doesn't have to be a channel. In this case, I've drawn it as a wedge, and each part of the wedge, the top upper rising trend line, has a lower trend line, little channel, and that's the resistance area. It got repelled from it the last time. And then it's got a support area, and it got propelled from the support at 61.31 back in November of last year. So this is coming. It's going into an apex, and if it breaks out of it at any point in the next month or so, if the Qs break into the 71.50 to 72 area, that's going to be really positive. Meantime, I would not be surprised if the NASDAQ it was the leading indicator, if for a little while it takes a rest and becomes a lagging indicator. That's just my guess. So next thing we want to look at will be the golds. I'm looking at the GLD for now because gold is down. I'm sorry, gold is up. The GLD is up at 164.15. My suspicion is there will be a leg D. And one of the things I'm looking at, silver's got a 90-something% stochastic in the daily. Gold is an 84%, and the MACD is good. So there's no reason now why I shouldn't break above 164.40, the high of the 17th, to make leg D. And at that point, I would not be surprised if I'm going to start drawing another arch formation. This time it's broken above the arch formation. And that's the way I'm looking at it at this particular point. So that's the goal. Now, I've got to keep in mind that for quite some time, the euro-dollar currency pair, gold and the stock market have gone hand in hand together to the upside. So I'm talking about gold as not being the place that I think trading-wise you can have nice trades to the upside, but my suspicion has been that it's going to go lower, and when it breaks 148 at some point it should break one or test the 148 area, 148.27. If it closes under 148.27, we will get it. That's when it will accelerate to the downside. Meanwhile, it's held in a very nice trading range. So if one is able to trade it on a very short-term basis for the potential, as I'm saying right now, for maybe a leg D up, and then you've got to be careful, that's fine. But the weekly chart is still very poor, technically. So I have to keep I consider that's the same. I'm not going to change my opinion yet. Now, this is leg D and a very strong move up in the silver. It's a very strong move up, but historically it's nothing. Other moves have been way, way stronger. To go to leg D from 28.61, when last time it went from 29.84 to 31.31, and this time it's only gone from 28.61 to 31. Whoa, wait a minute. Yeah, from, what is that, 29? Yeah, 29.84 to 33.31. I was going to say, that's impossible. 33.31. Yeah, this is way, way weaker. To get to leg D, but in the meantime, it's acting very well. The stochastic's at 93%. So if you are in the SLV on the long side, I'd say stay on the long side. Not my trade, because I didn't expect that it would go quite as high as this. I thought it might just sneak above that high of 29.89 back on the 2nd of January. So it's gone a little higher. And the stochastic and MACD are very good. But as I say, it's not the greatest move when you think of how much energy is used in the stochastic and the MACD, and yet it's only gone not even 3 points higher. So that's that. And the next thing I want to look at is bonds, TLT. The TLT is in a trading range. And that trading range is boundaried by 121.60 on the upside and 118 on the downside. I'll be right back. Basil Chapman, 877-927-6648. Love to take your calls.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go along the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We are back. Basil Chapman, Tiger Technicians Hour. Dow's up 9. S&P's up, down $1.17. Just wanted to show you this chart. I was asked, I had a number of emails. I'm sorry I couldn't get to all the emails. I just didn't feel that I could be very clear in my thinking to answer. I did answer some of them, but some of them I didn't. And I will get back to you, all those of you who had asked questions. One question I was asked about was the short term. I haven't been doing all that much showing of the very short term for a little while now, because I really want you to keep thinking bigger picture. It's besides my own trading, which can be very short-term oriented with the E-minis. But yes, the question was, can you use the ChapmanWave for small time frames? And in my Master Trader series, that's where we go deeply into that type of thing, because the methodology and the fractal is exactly the same. In other words, the patterns are exactly the same. The only difference is under 10 minutes, I have a special way of doing it where I use something called the phantom peak. And you have to learn that if you really want to be successful in trading very short term using my methodology. So, I'll get to that over this week. I'll do that. I'll even in my opening call. Let me just quickly talk about my opening call. It's my newsletter that comes out every single day. Very comprehensive. I mean, today I had 10 charts. I wanted to show the charts. I had a question. And I answered the question. The question was, where were your buy points? And I showed them on the chart. I print them right on the chart. A buy at this particular point, or short term. I put the profit or loss that we made, or whatever it is, or if we still in the trade, I just keep it there. So, yes. And then just in terms of my positions, the opening call has 4 longs. Let me just double check. One is up. Let's see they are all in profitable positions. There is one that and a couple made new recovery highs today, and most importantly, we did add a short this morning. It's making a tiny little bit of money, but I've got a feeling that this short is going to be one of those where nothing happens. I mean, out of the blue, it just drops quickly, and then we've got to think of covering and maybe even going long. It's one of those things. And I will probably be adding a couple of shorts this week, and I will also be looking to add one of our favorites back again. So that's the story there. Now let's just do this. I wanted to show. So here, right now, if you're looking at this middle chart right here, this is the NQ. I wanted to talk about just because I was speaking about that phantom peak that I only use in very short term, under 10 minutes. Under 10-minute time frames, 1 minute, 2 minutes, 3, 4, 5, 6, 7, 8, 9. I don't ever use a 9-minute chart, but I'm saying the 1, the 2, the 5, and the 10-minute. Out of those 10 minutes, I never use, hardly ever use phantom peaks. It defeats the purpose. But below that, you have to. But every once in a while, I went through these charts over the weekend, and I couldn't understand why I got to a peak C in the NQ, the NASDAQ E-mini 120-minute chart. Something was wrong, and I know my charts. When they are wrong, it just jumps out at me and says, go back, check. You've made a mistake somewhere. Made a peak G at 2750.25 back on the 13th of January. It pulls back to 2705.25 on the 15th. And then it starts to move, and I couldn't understand where it says D, I, a C. Finally, I went back over the weekend, and then I found it was right there. The high was 2721.25 on the 15th of January at 4 o'clock. At 2 o'clock. And then I hadn't seen it. But 2721.50, 25 cents high. That's what I needed. The ChapmanWave, it's a wonderful methodology. I just love it. Look, A, B, C, D. I said, is there a phantom peak I've missed? I went over and over and over because it just didn't look like it. Normally I can see it very well. I actually see it better on black background charts than white, but I'm doing my best. So there it is. So peak D pulls back, has another very quick A, B, C, D. And that D is below the previous high. It goes to 2746.75 and look sharply lower. Take it out the left side low. I suspect that the Qs are way weaker. The NASDAQ's way weaker. And at 2713, the 200-period exponential moving average will be tested in another couple of days. So that's 100. Just wanted to show that. And then you can do much, much smaller time frames. I don't really want to go to that right now while my voice is still working. I want to do what's feasible. I wanted to show you the IYT. This is the transports. Look at this leg. You know, ChapmanWave methodology, you talk about that the psychology of the stalk leg. Look at this. This is buying and buying. It isn't necessarily the pattern of the stalk leg sometimes. It is the psychology of the stalk leg. That single leg that even if it has peaks, it just keeps going higher and higher and higher and higher and higher. And you keep saying it's impossible, but it does that. Well, I've got the transports at 102.12, the IYT iShares, Dow Jones Transportation Average Industrials Fund. And that to me says very close to a pullback. 100.34 is the 9-period exponential moving average. You could take a little time, go a little bit below, maybe even to the 99s. 99.36 is a strong support there as well. And then what we're looking at is, I'm calling this leg B, E/B, but probably leg B in the weekly chart. Now, that means that was a peak A, B, C minus because it went lower. And there was a brand new buy signal at 85.83 in the weekly chart. But look at this, the monthly chart. I mean, can you believe? I wish I had this notated like I had it before. I'm going to go to the Dow Transportation Index itself. There it is. Look at this. This is, I'm going to squeeze it close and tell me if you see that this is not at an all-time high. It's higher than at any time. Even in 2000, when the markets were making their highs, the Dow Transportation Index is skyrocketing. Look at that. And here's another surprise. Let me show you this. So this is only leg B. I have to call it leg B. Even if A, B, C, or even if it was a C, if I consider that that was the start of a new move, it's still very positive. But what's very important is that in this particular instance, you've got a very important component. You've got the transports, that's the airlines. You've got the truckers. Everything is moving in sync. Now look at this one, IYC. IYC is the iShares Dow Jones U.S. Consumer Cyclical Sector Trust. This is in leg C. So you could tell that no matter how I count this, this is saying we are going higher. Does it mean that we couldn't have a really sharp pullback? No, it doesn't mean you can't have it, but it just says regardless, whatever the price is right at this moment, you will see higher prices in the future. So I like that. I really do like that. And it took me a long time to be able to have the patience to wait for my monthly charts to be putting this into perspective. Now look at the TLT. It's at 119.94. It's made a peak B and it's made an arch formation, but it hasn't turned down decisively. It's really, I'm going to do that. I'm going to do this right here. I want to show you something. Here we go. 1, 2. Just put these little things together. There. If the TLT, if we do get a pullback in the market over the coming, let's say in 5 days' time, 5 sessions' time, the Dow is at 13,520 to 13,470. I suspect that the TLT will be pushing above the 120.70 high of the 15th to make leg C up. This will be a counter trend rally. And the counter trend rally tells me the higher it can go, the more likely that bonds are going to be, because they're being supported by the Fed. Every other way, I would have said it's all over for bonds, but this is different. You've got the dollar being smacked down. No matter what happens, look at the dollar. Smack, smack, smack. This is whack-a-mole. It just cannot get over its own way. And at the same time, you've got bonds, prop, prop, prop. They're being supported. USH 13, they being supported by the Fed, and they keep on holding. But my suspicion is that at some point, the TLT, that's the Lehman 20-year T-bond fund, will in fact break the low of 117.36 that it made the week of the 4th of January and start to pull back. And then it'll be in a very big trading range as the market goes higher. And I wouldn't be surprised if it starts to test the 109.69 low of March of last year. And remember, all that does is it puts interest rates still really low. Oh, they could pop 20%, 30%. But from the 3s, the 2s, I mean, this is, it's nothing. They're still very, very low historically. So that's the way I'm looking at it now. And then one thing that I didn't do is crude oil CLH. I don't know if the H is what people trade, but I'm going to do the H. The CLH has made a leg F/C in the daily chart at 96.50, and today's high of 96.53 makes leg D. Look how all these little ducks are sitting in order to say, hey, we're getting close to at least some kind of just a consolidation, a breather, something like that. Crude oil in leg D, the weekly chart is making a cup formation. The monthly chart is just trading in a narrow range. Let me just see if I can pull up the CL.P. No, it's not CL.P. It's CL. It's CL. At CL.C, I believe. Yeah, look at that. That's the dreaded H that becomes an M, a continuous M formation. So, let's see. Any questions there? No questions, no questions. All right, here's something that I wanted to point out. Now, I wrote it down. Let me just check where it is. Hey, look at this. If I say to you utilities, anybody buy utility stocks? Have a look at this. The utility index, the select S&P utility index, or fund, spider fund, is holding really well. It has made a peak E and a cup formation peak E top back in December of 2007, back in the 44-something area, and then a pull back to 22.48 in March of 2009. And now it's steadily walked the 9-period moving average, but like bonds, it's pulled back quite sharply. However, the weekly chart is saying, I love the way the voice just does its own thing. You say something and it pops up, it breaks this way, breaks that way. The weekly is saying, if the utility, the XLU is able to break above 3607, no, if the XLU is able to close above, it cannot break above, it's going to close above 3607, the high of the week of the 21st of December, it could have a rally, a nice rally, that takes it to about the 37 to 37.5 area, at which time I wouldn't be surprised if it starts pulling back. But it is fascinating that it's done so well. And some of the stocks within it are unbelievable. You know, this is the most hated bull market I've ever known, ever in all the years that I've done, decades that I've been in this business. I just cannot believe how it's hated. It's just, people have been shorting all the way from just about the low of 2009. Within months, within 6 weeks, in fact, people were already shorting, and they've been shorting all the way up. This is the most hated, disbelieved bull market, mega bull market that I've ever come across. So I don't want to fight the trend. I don't want to fight this trend that says to me, there are stocks that are still doing extremely well. There are stocks that are very tight. They've had a magnificent move, and they deserve to have a rest. And that's the way I'm looking at it. I'm being very selective on the short side. I prefer to stay on the long side. And going back to the XLU, if the XLU takes out 3607, just takes it out on the daily basis, that would confirm that it's probably leg B to the upside. But if it closes above that, that would say, hey, the stochastic's probably going to be up at about 89 to maybe 90%, and if it holds, that's going to be very positive. So you can see what I mean. What I mean when I talk about the rotational aspect of the stock market correction since the first summer. Was it the first summer? No, since the second summer. From 2010, I started talking about rotational corrections make the declines very short, very swift, and buyable, because you rotate. The market just rotates from the weakest to the strongest, from the strongest to the weakest, thereby keeping that buoyancy, that balance. You know, when they talk about a barbell effect, you've got something on the one side, you've got something on the other side to counteract it, and that's really what happens in those corrections. And I wouldn't be surprised if we're going to see the same sort of correction right now. Now, I just needed to talk about one thing. When you compare, look at this chart that I'm showing now. This is the monthly chart, the very long-term monthly chart with the ChapmanWave notations of the Dow. Having made this new move to the upside today, I have to put this as a G/C. It's the discipline I have. Even though my bias really would be to put C/G, I will only do that at the end of the month. Or I might just skip the G completely. But in the meantime, it's G/C in a kind of a V-shaped formation, going back to the old highs. But what I really wanted to do was to say, FDR in 1933 started his term, and the market ran from the 40s low to 500% gain at 195 back in March of 1937. Then it pulled back 50% to the March low of 1938 at 97, and then it ran to 158.90, 63% gain, and then it gave it all back. But this is a very different period. I'll be back. Basil Chapman, Tiger Technicians Hour.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, final segment of today's show. And I hope I'm well. I know I've been told that this is one of those things where one day you could feel good and the next day you could feel lousy. So far, everything seems set. I should be okay. At least for my subscribers, I will do my absolute best to get my Traders Corner out for at least a minimum tomorrow. But if everything goes well, we'll just have the usual charts. Everything will be set just fine. So now let's just look at this. The parallels between the chart pattern back from 1932 to 37, the top in 37, and then the decline, and then further decline to April of 1932. It can't be 32, that's 42. April of 1942. And then the rally, so that Truman, while he was president, saw a gain, but a lot of the gains were given up. 40 came in at about 1933. Came in round about when it was. Let me just do this. It came in right in January of 1933. So January, there it is. So he came in when the Dow was at about 60, between 58 and 65. He concluded his term, 3 terms, right? Truman. 45. So Truman comes in January of 45, and the Dow is at 156, 150. So what did I say? 80. So that's up a very good percentage. But in the meantime, it had gone all the way back. It had gone all the way up to 195, down to 97, down to 92, just a little above where it came in. And then it went up very sharply. But the Fed did something completely different there. And although I'm not going to talk politics at all, except we know that the mantra was to give as many programs out as possible. We've got almost the same kind of mantra today, yet there's a completely different chart pattern. We are going back towards all-time highs. So there's a very big difference. I've got to look at charts, and I've got to say, this is what I must decipher. I cannot extrapolate one period and put it into another if the price is different, and price is the arbiter of the trend. And for now, I'm just saying, whatever the Fed has done, regardless of what one thinks, and regardless of the future outcome, is that people have had a chance to get back to even. You never, ever got that chance in 1929 in such a short period of time. So that's number one. Number two is this psychology that I'm talking about, the stork leg mentality, is to buy the dips. That will stop at some point. So it's going to take, at least on the short term, some kind of tentative movement, some kind of negativity in the market itself to be interpreted to drag the Dow down about 200 to 300 points. That'll be the S&P about 30 points. So I'm anticipating that it's going to happen, but we haven't got a plan of action yet regarding that in my opening call. We will have a plan of action very soon. But in the meantime, I'm using the ChapmanWave methodology, which I've shown you right here. I'm using that to say the parameters that we are looking for are very clear, and the parameters are that I'm waiting for the Dow to get to a leg D, and then I'll make some kind of decision. It's in leg C right now. The ESH is in leg C. The SPY is in leg C. The Qs are lousy. Qs are failing miserably. Is Apple part of that? Probably. Apple is down 2. It's part of it, but there are others within it. There are many IBD. Look at this DDD. This is number 1 on the IBD top 50. This is in leg C, same as the Dow, same as the S&P, same as the same as the E mini. So I'm anticipating this top performer will still make a leg D, and then it should have a pretty good pullback. So I'm leaving you with that. My service is the opening call. Go to the front page of TFN and check it out. 2 weeks free. We've had some good successes, and I'm pretty proud of that. I'll be right back here tomorrow. Everything working out well. I'll be back. Have a great day, and stay tuned for, it's today, the Options Hour. Should be a great show, the Options Hour.